Hey everyone, Stephen Gage here, founder of Vision Commercial Development. Today we're diving into a crucial strategy for real estate investors that are looking to optimize their portfolios and financial outcomes, the 1031 exchange. Before we jump in, let's clarify what a 1031 exchange is. Named after Section 1031 of the IRS Code, it allows investors to defer capital gains taxes by reinvesting the proceeds from the sale of one property into another like-kind property. This isn't just about tax deferment. It's a strategy that shields you from immediate tax liabilities, which can soar up to 20% for those of us in the highest income brackets. This strategy allows you to channel your capital into more lucrative ventures seamlessly. The 1031 exchange isn't for flipping houses or your personal home. It's for properties that you've invested in or used in your business. The 1031 exchange is tailored for properties held for productive use in a trade, business, or investment. This opens the door wide for investors to transition between various real estate forms, be it a stretch of vacant land or a towering commercial complex, ensuring that that move aligns with their broader investment strategies. So let's talk about why the 1031 exchange is a game changer for commercial real estate investing. For starters, it can significantly boost your cash flow by allowing you to transition equity from fully paid-for properties into higher value investments. It also simplifies property management by enabling the consolidation of several assets into fewer, more manageable assets. For those looking at estate planning, a 1031 exchange can serve as a strategic move for reorganizing your investments into assets that simplify the process of distributing them for your beneficiaries. Lastly, it offers a channel for diversification, spreading investments across different geographical areas or property types, and even opens up a gateway to acquiring vacation homes under specific conditions, thereby broadening the scope of investment opportunities beyond traditional avenues. While the 1031 exchange is a great strategy, there are some important rules that you have to follow in order to qualify. First, there's a deadline. The moment you sell your property, the clock starts ticking. You've got just 45 days to pick out a new property that you might want to swap for, and then 180 days from that point to seal the deal on one of them. Second, the properties you're switching for need to be like-kind property. The definition of like-kind is broad, focusing more on the nature of the investment rather than the grade or quality. But it's essential that the replacement property serves a similar investment or business purpose as the one that you're selling. The last rule we will cover involves a qualified intermediary, or QI. You'll need a QI to hold the sale proceeds until they're reinvested. Choosing a reputable QI is crucial due to the minimal regulatory oversight. Let's circle back to why the 1031 exchange is such a game changer for investors like us at Vision Commercial Development. By effectively using this tool, we're not just saving on taxes, but we're actively repositioning our investments to align with our long-term vision of transforming properties and communities across the state of Colorado and the U.S. Imagine taking an older, high-equity property and turning it into a cornerstone of a new development project without the immediate tax burden. Or perhaps consolidating scattered investments into a prime, easy-to-manage asset that's poised for growth. That's the power of strategic reinvesting through 1031 exchange. I'll give you a brief example of how I used the 1031 exchange method to move from one property into another. I had a small industrial warehouse that I had owned for some time, and it was completely paid off. We went ahead and sold that property, but rather than pay the long-term capital gains on the $1 million the property had appreciated, we identified a new project and rolled that money into a newer and larger warehouse, and we were able to defer our tax bill from the sale. It's a nice way to move up into larger and more expensive properties, since you wind up with a larger amount of capital to spend on the new property because you aren't taking out an amount for taxes from the initial sale. As we wrap up, remember the 1031 exchange is a complex process that requires careful planning and expert guidance. At Vision Commercial Development, we navigate this journey with our partners and investors. If you're looking to expand your real estate portfolio or want to work with a team of seasoned investors to explore new opportunities, please visit us at visioncommercialdevelopment.com. If you found this information helpful or have any questions about 1031 exchanges and how they fit into your investment strategy, drop a comment below. Don't forget to hit the subscribe button for more insights into real estate investment strategies, market updates, and everything you need to know about commercial real estate investing. Until then, see you next time.